Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. My name's Aaron Edwards with Santos Springs. Today is September 2nd, 2025. Welcome to September. Hopefully harvest isn't too far away. Some of you guys in the South might even be running or pretty close to running. Have a lot to cover. The big headline is we want to talk about a golden cross in the soybean market. So we're going to be going over that. But first, as always, we want to start with the call to action recommendations. So let me share the screen. And this week, no action recommended. Let me check that box. There we go. No action recommended. Before we jump into the analysis, we'll talk about corn, we'll talk about beans, we'll talk about the golden cross on beans. Before we do that, I wanted to just briefly talk a little bit about basis, because I think it's important to kind of get an idea on how markets work, and the basis gives us some really interesting insight. So I'm going to talk a little bit about the basis I'm using as an example is Tippecanoe County, West Central Indiana. They put out Purdue puts out a good basis tool. It's also my alma mater. Let me get green. There we go, green. And the first thing we're going to talk about is the soybean basis. I don't want you to focus too much on these cents per bushel, because price levels on basis is location specific, but the general trends of basis, where it kind of anchors down at harvest, goes sideways, gets a little bit of rally, maybe a little more rally. The general trends of basis are fairly uniform, at least across the Corn Belt. You get, down into the Delta region, it behaves a little differently. Go too far east, where you start getting into a lot of demand, more demand than production, it behaves a little differently. But for the bulk of the Corn Belt, basis patterns are pretty uniform. So what I wanted to point out, which I think is very interesting, the first thing I wanted to point out is this gap. This blue line shows historic basis levels for this time of year, and the black shows where we are this year. And just this wedge for me is interesting, because as you know, we've seen like 10 days ago, last week, we saw soybeans make a push upwards, but what happened to basis? Boom, collapsed. So there's a degree of efficiency in these markets. I'm not saying that in a good way. It's frustrating from a farmer standpoint, but we see soybeans rallying, we see the basis pulling off. Any little push we get on a speculative push in soybeans, basis is backing off. That shows quite a bit of responsiveness and efficiency. Think about it. Think about efficiency in markets as there's a lot of selling pressure over this market, that if we get any type of rally, they kind of push it down. But the flip side of that is, what we're going to look at corn just now, which is speculators, the funds, let's do this in red because corn is no fun. We've seen current basis level even a little bit above or very similar to historic basis levels. So historic basis levels have plummeted, but we're actually hanging in there on the corn. But then if you look at what's happened on the speculative front, you'll see, hey, speculators are pushing this market down. So the cash markets are saying, well, I got to pay something or else I won't be able to buy corn. So you see a willingness on, when spec funds are pushing markets down, you see a willingness on the cash market to bid up. That's evidence of a lot of buyers. But then on the soybeans, you see any tiny little rally that we get from a speculative push, and all of a sudden there's selling pressure, pushes basis down. It really looks like there's a lot of selling pressure above this market. There's a lot of buying pressure below this market, and we're kind of wedging into whatever the cash harvest price is going to end up at. And often we get basis levels anchored down. So last year was lower, but you kind of see this anchor at basis. And then that is kind of the darkest hour from a basis standpoint. And many times we also get futures prices finding some type of solid floor around harvest. So it's not that I'm optimistic. I mean, it's hard to be optimistic with as bleak of a situation as where basically no farmers can make money at current price levels. Having said that, there's just a hair of seeing that calendar flip from August to September, getting Labor Day behind us, saying, okay, probably either that August low was the harvest low for corn, or we're coming up to it soon. We can probably start getting close to a harvest low. And once we get that in the rearview mirror, all right, now we can look for a little bit more optimism, some opportunities, and we can finally get a market heading in the right direction. So it's not necessarily optimistic. It's very hard for me because of seasonality to be too bullish in August, and it's hard to be too bearish in September. And so between last video and this video, calendars flipped. And so, attitude can be a little bit more bullish during this time of year. Typically being bullish in September isn't too bad unless you get a weird crop failure or something like that. Typically you're pretty good seasonally to be fairly bullish in September. So, all right, that's that. And then as always, we want to, just our philosophy is good grain marketing starts with a foundation of making sure that the decisions that are on your farm, you know how to place your bushels within a portfolio and how to execute. Next step up, we look at funds, we look at seasonality, we look at technicals. Finally, that gives us the call to action, which this week is no action recommended. That doesn't necessarily mean it's not an important week for markets. I actually think it is a pretty important week for markets. I think we'll look back on this week and say, well, coulda, shoulda, woulda, or kind of saw that coming. Or I think very likely there's some meat or some important facts in the market this week, but no action recommended as far as what to do. So let's get the screen share and want to start talking about the corn, and let's get green. So the corn market has been really rough. If we look at the position of the spec funds, roughly drawing this line under that level or at that level. Below here, it's basically speculators have oversold corn. Corn is artificially low. It doesn't make sense. And we're still right there, right? We still have a large sold position on the corn. These blue levels, that's where, okay, price of corn is artificially high. And you go back to those, the position of the funds when they were around there, that turns out to be the market high for the year. So speculators are still oversold corn. What's a little bit interesting for me is from their maximum oversold position, they've kind of been stair-stepping this. They kind of said, okay, maybe I am oversold. Let's take small steps back, and that's good. They're not betting on more downward pressure in the corn market necessarily, but they're not bullish. It's not like they're buying corn. They're still sold, heavily sold, They're just not increasing their position. What that looks like on a pricing chart is interesting. We see kind of this maximum, and it doesn't line up perfectly, but you can see the trends. See this maximum point of kind of like, the sky is falling, the lows, speculators are oversold. They're actually, if we look at their oversold position, it was maxed out on that dip. And then we've seen a recovery from there. Real friendly trade last Friday. That's that green bar, a little softer coming out of the chute after a 3-day weekend. It does not surprise me that we get a sell-off. The question in my mind is, where is the support in this market? I'm going to give two strong candidates. The one is that black line, which would be the August lows. The other one is this blue line, which is the 20-day moving average. If the 20-day moving average can hold, that's kind of the best scenario in my mind. We come down here, we tap it, and then we kind of rally up. That would be ideal. That means that August lows were the harvest lows. We all of a sudden have an uptrend supported market. We can be excited. I'm not convinced of that yet. Maybe even this week we'll say, okay, the 20-day moving average held. But I think there's also a decent possibility that we're actually going to work our way down and test those August lows. Maybe we take them out, maybe we don't. And if that's the case, we'll eventually say, okay, August was the harvest low or September was the harvest low. Can it go down beyond that? Sure, but what I think is more likely is that either we come down to this level, we say there's a double bottom, and then markets rally, or we don't even fall that far. We stop at the 20-day moving average, and then we can start getting a little bit of an uptick. So I'm not saying I'm really bullish, but I do think there's reason to be a little bit friendly these markets. Not necessarily this week. This week, I feel like we're looking for support. But if we find support, there's reason for at least some optimism. Now let's shift gears to the soybean market. And that's kind of maybe the most encouraging thing would be that golden cross on soybeans. But first of all, let's look at the position of the funds. Get a marker, let's go with blue, and let's pull this down to the bottom. There we go. So soybeans, huge oversold position back a year ago. Got a little bit long a couple of times, but really most of their trade since the last 11 months, if we look back to October, most of the trade was a little bit long or a little bit short. That gets most of the trade. And if we look even more recently, between mid-July, we were long, short, pretty short down here, and then less short, neutral, and now we're long again. It's just back and forth, not really making up. Speculators can't decide if they're bullish or bearish beans, and we're just kind of seeing this sideways trade, really. If we want to kind of look at that sideways trade, let's get black up here and let's draw some lines on the November soybean contract. So let's draw a line there at 970. It's actually a hair under 970. Let's draw another one here at 1070. And then halfway would be 1020. So those lines it's not cooperating with me. Those lines aren't perfect, but they give us a pretty good idea of kind of splitting this market into halves. And what's interesting is we've had some dips, but they haven't lasted long. We've had some times it bumped up here close to the upper end of the range, and I've recommended sales. I think there has been selling pressure. So far, so good. The optimistic thing is if we look at a golden cross, so we're going to look here at this blue, switch that to blue. This line is the 20-day moving average. This line is the 200-day moving average. When you see those two lines cross, basically the 20-day moving average is just the average price of the last roughly month, 20 trading sessions, roughly 1 month. And then the 200-day moving average is the average price of basically the last 10 months, ballpark, right? 200 days. So when you have the average price of the last month trading above the average price from the previous 10 months, that's friendly. And we have that happening. We have a golden cross, and it's happening in basically the upper half of the market. There is a possibility in my mind that we're going to see the soybean market tap here and just rally up and stay above that 20-day moving average. And boy, do we need that, because most of the soybean prices that have been offered to farmers have not been profitable. And it's really tough to say I'm going to sell beans and I'm not even going to make money. Having said that, that would be ideal, possible. That's not, in my opinion, that's not like blind bullishness, over optimistic. Possible. What I think is more likely is that we're going to, yes, stay somewhat supported in the soybean market, but maybe we trade down to the 200-day, and then we try to rally a couple more times, kind of go back and forth, trading up and trading down, but we're slowly gaining steam until we can make a push, maybe more of a, late September, October push. I'd be surprised if it just, touches the 20-day, we get a really friendly rally, because I think it's early enough to where if that were the case, I think there would be a fair share of selling pressure on top of the soybean market. So as long as we have that selling pressure where farmers are saying, man, I should have sold it at 1060 or 1070, I think very likely that's going to cap. And the evidence that there is that selling pressure for me is how quickly the basis backed off. We got a little bit of a rally, basis backed off, right? If we are having a rally and basis strengthening, then it's like, oh my goodness, this is going to take off. What I think is a more likely scenario is we don't get a runaway rally. Like, it's not like we tap the 20-day now and get a runaway rally in the next week. Although that's possible, I don't think it's super likely. I think it's more likely that we kind of go back and forth sideways, but at higher and higher levels, kind of stay in that uptrend. And then we start talking about weather risk out of South America, maybe some delayed rains or something like that. And we get past some of that farmer selling that needed to happen right, straight off the combine. And then all of a sudden it's, late September, mid-October, and then there's not really that much selling pressure left on top of this market, maybe a tiny little weather scare out of South America, and then finally markets give us profitable numbers, even if they're only kind of profitable. So I'm very happy we have this golden cross, but I would say I'm cautiously optimistic. Good news, but cautiously optimistic. Let's, kind of like the corn, although it's friendlier, let's go find support. And once we get that support, then we can start getting friendlier or more willing to take action on upside potential, in my mind. All right, so now let's go back and let's just kind of wrap up the summary here. So seasonally, corn is now, we're in September, it's a buy. Seasonally, soybeans, we're in September, it's a buy. Managed money for corn is still oversold, so this is a buy. You see how those indicators are starting to line up? It's neither a buy nor a sell on soybeans from a managed money standpoint, because they've just been a little bit long, a little bit short, a little bit long, a little bit short, nothing much to write home about. Soybeans are in an uptrend, and they're actually above the 200-day average and the 20-day moving average. Very good. Corn is above the 20-day moving average, so it's in an uptrend. Sorry, I mentioned soybeans first, but corn's also in an uptrend, but it's only above the 20-day moving average. We still have that 200-day moving average on top of this corn market. So even as corn rallies, it's going to be a tall order to get through that 200-day moving average, which is sitting close to 440 on the Ds right now. It'll gradually come down. Basis. Basis levels are very responsive to buyers and sellers, and consequently the board of trade price action. In the case of soybeans, we have seen softer basis as futures rallied. In the case of corn, we have seen steady basis as futures are pressured down by speculators. The most exciting technical point from this week is the golden cross in soybeans. This could point towards higher soybean prices, possibly even breaking out of the range that has been in place for almost a year. Corn markets had a solid pop last Friday, but are losing steam and looking for support. There may be some decisions that you have to make on a case-by-case basis. If you're in that situation, shoot me an email. Let's talk about your particulars. Generally speaking, I think that kicking the can down the road on action this week and just getting a little bit more confirmation as to whether, where there is support in this market, I think that that's a better move. Another way to think about it is when we have kind of a valley in the markets or a dip in the markets, I'd rather be a little bit late to it, but get the direction right than try to keep guessing it and then and miss the bottom by quite a bit. So I'd rather just kind of be late to the game. Maybe we already are, so to speak. Maybe the harvest lows for corn were August. Maybe it is past the time, but seasonally we're just now stepping into the buys, and we probably have several weeks here where we're going to have some opportunities to layer into long positions or kind of search for that harvest low. So maybe it's behind us, but I don't think from a decision standpoint, I don't think we've missed it. I think we'll have other shots at being well positioned in this market. And honestly, I could do with bearishness being in the rearview mirror. So I sure hope that's the case. We'll keep a close eye on it. Hope everything's going well with your prep for harvest, and stay in touch.